Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500, ticker symbol SPX. And so it was requested that I go over shorting the market. And so I just wanted to start here with the SPX and how it's topping and that we might, be at a good time to short it. And so, I'm just going to go over the SPX, the SPY a little bit, and then also the QQQ, and then some shorting ETFs, as well as some semiconductors, because, I think it's all connected, and I think that we are getting pretty close to a top, and I actually think we might be seeing a pullback on Friday, June 7th, and I should note that I am recording this on Thursday, June 6th, after the market has closed, and the SPX closed at a price of $5,352.96, being just below an all-time high that it hit actually on the day, which was a high of $5,362.35. But actually it shows here with the little number here, 35 cents. Yep, 35 cents. So that's right. Anyways, I wanted to take a step back initially to just look at this because I think this trend line does suggest that we could be at a top. And also, I think the candle pattern for the day today, Thursday, could also be suggesting a top. So I'll go over that in just a second. But I did want to go over this trend line that, is based on the high hit around mid-August of 2022. And then the other pivot point is based over here, which was the prior all-time high hit at the end of March earlier this year. And so that's how I get that trend line, and you can see that price has been testing that previously in May, and now that we're in June, testing it again. And then these blue lines represent some gaps to the downside. Actually, this one right here around $5,000, that one does look like it has been filled, but there are these gaps down here. And also, this was not a prior all-time high, because we do have, some highs over here. But this was a pivot point where we did top out at before pulling back about, 11% there. So that's pretty notable. And so that point is around $4,600. So quite possible, if we do really break down a lot, maybe we could be pulling down to there. And let's just see what kind of percentage move that would be. That would be about a 14% move. So, it's not, completely, out of the picture relative to, seeing an 11% drop here. And then this other line that I do have marked here right around $4,800, that does represent the previous all-time high that was hit in 2022 at the beginning of the year. And then this other line that I do have drawn here, I'm going to switch over to the weekly time frame so we can see that I've done a bunch of, trend lines that have acted as support. And so that one does go back to the COVID crash here, start of the pandemic, lows there, and seen this big rally. And we have been testing, or actually really, we've just tested it a couple times based on these pivot points, nearly tested it here in November of 2023. And now, it does look like bumping into the top of this line that I just went over. But, before I switch over to the other tickers, I did want to go over the daily candles to just go over what I see in the chart, really just looking at this bounce that we've seen going up from the lows that were hit on May 31st. From last month, the end of last month, we are up about 3%. And the thing that stands out to me as not looking so good, and I think this is actually a common mistake, is that, this looks like it's a hammer candle. But the reality is that's not a hammer candle. That's a hanging man candle. We've seen this nice big move up, testing all-time highs, and then we get this actually pulling back. It's probably closing in the, upper third of the trading for the day. So not exactly, being that bearish because, trading in the bottom quarter, that could suggest a reversal, a topping signal. But this hanging man candle does suggest that we could be seeing a reversal. We could be seeing a big candle down, just like we see this green one here. We could be seeing one tomorrow that might look something like this. So maybe a drop of 1%, quite possible. I do believe that the non-farm payroll is coming out tomorrow. I'm not exactly sure, but I do think the markets could respond to that one way or another. And looking at the chart with this line just above us, putting in the hanging man candle. Also, if we do look at the highs that we're putting in higher highs in the stock price, but actually lower highs in the RSI, and that is bearish divergence. So, I do think that there are a lot of things suggesting that we could be putting in a top soon. So it might be a good idea to short the market. And so, if you do want to trade this, after or before the markets open. You can't really do it with the SPX, but you can do it with the SPY. And, this is also, in the hundreds rather than the thousands. But I just find as far as charting goes that the SPX is really nice, going back to that prior all-time high from 2022. I just think that you get things lining up a little bit better with the SPX. So I didn't really do any analysis with the SPY. But if we do look over at the QQQs, we do have a pretty similar trend line here. That does look like it's been acting as resistance. And, we're just under there. And I should note that the QQQ is the NASDAQ, an ETF that tracks the NASDAQ. So, I think that all of these, that I've just gone over could be suggesting that a top is in. And if we do look at the daily picture here for the NASDAQ, also, another hanging man does look like a hammer candle, but it's actually, at the top of a big move that suggests a reversal. So I think that this could be coming down, and with that, we could be shorting these. And so there are different ways to short the NASDAQ, short the S&P 500. And what I have been doing over the course of this year, I am holding the bag right now, but I add in very slowly. This is ticker symbol SH. This is non-leveraged short the S&P 500. So it's kind of a safer play because it's not leveraged. You get smaller moves to the upside, but you also get smaller moves to the downside. And with this, I've done this Fibonacci retracement here and, a really extension from the top. And from that, we're putting in, new lows over here, breaking below $12 a share. And actually, the lows over here were $11.81, so really not much lower. But, I do think that we could be seeing, bottom being put in as we do have lower lows being formed in the stock or ETF price. We actually see it more or less flat, and since there is some divergence there on the bottom side, that does suggest that there is bullish divergence, or it's weak because the lows in the RSI are flat. They're not higher lows. That would be bullish divergence. Since it's flat, that's technically a weak bullish divergence. So eventually we will likely be seeing this turning around, but it also might be going lower. And so my strategy with this shorting the market is adding very slowly, and eventually, maybe after, some squeezes happen over the next couple months, I might be in a better position to add more heavily to these short positions. But because, I do think that finding the top does take time, and, it takes longer than we expect. Think about Michael Burry in The Big Short, that movie. He wasn't wrong. He was just very early. He was right. He was just very early. So right now, I still think we could be early for the top, but I do think it could be getting closer. And so one way to also be shorting the S&P 500 is with ticker symbol SPXU. This is 3x leverage, so you do get a little bit more exposure. You get a little bit more volatility, whether it's to the upside or the downside. So 3 times the profit, 3 times the risk. So got to be careful with it. But so with this one also putting in, newer lows over here, closing, on the day below $31. And, prior low over here was 32. So, could be a nice one to be averaging into a position, waiting for that top to be formed in the S&P 500. And then, to just hang on, hold on for the ride on the way down. Another way to short these is going to be the SQQQ. This is also 3x leveraged. And so as you can see here, not below 9 just yet, but getting pretty close. And, this is, new lows over here, I believe, new all-time lows. And so with that being said, there could be a lot of upside from here, but, it might also take some time to, turn around for that top in the markets or the bottom here. to really be found and to be, the forever bottom. So maybe this does cross $9 a share, so do keep that in mind. And also do want to note that this does have, really the opposite signal that we saw with whether it's the SPX, SPY, or the QQQ. We see, a big red candle here from Wednesday. And then while we don't necessarily see an inverted hammer candle, which could suggest a reversal, we do see what looks like a spinning top candle here. And so that also is a potential reversal pattern, suggesting, that there's indecision. And so what I could see tomorrow is a pretty big move up here, and that could be about 4% with the SQQQ versus, just the 1% that we might see as far as a pullback with the, the SPX. So good to keep in mind. And also, before I do close this, I did want to just touch on semiconductors, because I do think this is also a very nice way to short the market, because a lot of the pushes in the NASDAQ, it has been because of semiconductors, specifically because of NVDA being the monster, the beast that it is. And so here I do have SOXS. This is 3x leveraged short semiconductors. And so, same type of pattern, that we saw with the NASDAQ, that we saw with the S&P 500, or the short ones, I should say, is that we have this big red move down, and it does look like we see this kind of like potential bounce here. Maybe there's a bottom signal. And so with this, we don't even need to take a measurement here. It just says up at the top, you can't see it. I guess, let's see. It's the red over... Yeah, I mean, it's up here, but you can see that the percentage is down 13%. It's a 13% drop on that day. And so, if we do get a candle that's similar to that, but going in the opposite direction, that is about a 9% move just to go for that candle, but to fill this gap here, that would represent about a 15% move to the upside. So, this does give a little bit more exposure to that volatility, but it is a little riskier because semiconductors have been driving the rise in the market. And looking at NVIDIA here, putting in an all-time high on the day, having hit, I imagine, during the day, crossing over $3 trillion market cap, but closing on the day at a market cap of $2.98 trillion. Quite possible that's the top. And maybe this just gets a retracement down to like 1,000 a share, something like that. I should note this is NVIDIA, ticker symbol NVDA. But, maybe it does go lower, as we have just been on such a rampage with this. So, I just wanted to share that, and also, just close on shorting the market. And I would say the most conservative way to do it is probably going to be with ticker symbol SH. So I'll close on this, but those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and hopefully this was helpful. Take care.